All right, guys, today I'm going to tell you about a protocol that really just keeps swinging one way and then the other. All right, it's called Pendle. Now, I've criticized Pendle a little bit when they first came out because honestly, it took them a while to hit the ground running and there was nobody that was willing to play ball with them. Things are changing now, and I'm going to give you a little update on what all they've been up to. So, Pendle's actually a pretty interesting protocol. You're going to have to understand several other things before you fully are able to understand how Pendle works though. So I'm going to give you an oversimplified version of it today, but you should really check out some of our other videos so you can fully understand what all they do. But for a simplified version of it, what Pendle does is they let you bring in a token that has a native yield of some kind, and then they'll split it into two tokens. All right? You'll have the first token that is just a token that is redeemable for the original amount of what you put in there, okay? But it's not redeemable immediately. It's redeemable in the future. Call it like 90 days or something. And it's gonna keep growing in value, in amount of the thing, until it's eventually worth the full amount of what you originally put in. So if you put in 1 Bitcoin or Ethereum or whatever it is, you're gonna get 0.98 or something of this token, and then the other token an amount of it. And this token will gain value and become worth 1 by the time it's done. So you will be able to redeem it for 1 of the original token. Now, you'll actually be able to redeem it for a little bit more than that because you're gonna make a gain, a spread on it. But where's that spread coming from? Well, it's simple. The second token is the yield token. This represents the expected yield of the protocol, or of the protocol's token. So if you expect that Ethereum is going to have 4% staking yield over the coming year, and you come in there with a staked Ethereum token, a liquid staking token, you come in, you break it, you're going to have a token over here that is going to be redeemed for the original Ethereum thing, all right? And then you're going to have over here an expected yield token. And you're actually going to get paid the yield that actually comes in from the protocol here. Now, it's going to accrue over time, and the value of this yield token is going to go down. Why would anybody ever buy a token that's just going to get you the yield of a thing and then be worth nothing at the end? Well, it's simple. So, at the end of this process, it may not be the amount of yield that was expected that actually got generated. There may be more yield that came in. If you think rates or earnings on this particular thing are going to go up, you can buy this token and you will benefit from the increased earnings. And so it costs very little to get these tokens usually because there's a set amount of time and there's a set expectation of the yield. But if you think it will go above that, you can buy it and you will get paid this additional yield that actually turns out to be true. Now, conversely, you can buy it and there's less yield, and now it's not good. Now you've really lost some money. But this is what happens when you speculate on rates, especially earning rates in the future of a protocol that you can't control. But it creates a really interesting little dynamic. People who want to speculate on gaining yields, they can do that. They can also short these yields by doing a whole bunch of other things, but basically they can borrow it and then sell the token, and then they'll have the money and also be short the yield, and you can create a position like this such that if the yield underperforms, you end up benefiting. So there's a whole bunch of interesting little things you can do there if you really have an insight on the yield rate of certain protocols. Now, on the other end though, is where I get a little bit more excited. So over here, you effectively have a zero coupon bond, a thing that is going to be eventually redeemable for the face value of something, but it's currently worth less. So you can have a baked in yield that's guaranteed, nice and safe, and you can have it on all kinds of different things. So this might not be super relevant on a bunch of things like Ethereum where, yeah, the staking yield is probably going to be about this. So yeah, if we can get a little yield locked in here, maybe if a protocol has a new thing like maybe Pyrex ETH where their yield is higher than normal and you want to lock in that, okay, yeah, you can do that. But usually that's not where the really good juicy stuff's going to be. But on restaking tokens, however, like restaked Bitcoin and restaked Ethereum, the yields are projected to be really, really high on a lot of these things. Well, if you can lock in that really high yield rate, even if you end up giving up a teeny tiny little bit of the actual potential yield it could be, you can lock in that yield rate, take it to a place like Zero Wind, which I'm liking more and more by the day, even with all their problems, and you can go and borrow stuff and have a very reliable amount of collateral gaining value at a reliable rate. This will let you set your expectations into the future and gives you a whole lot more flexibility and gives you an earning asset on things that sometimes might not earn that well. For example, Bitcoin, notoriously hard to earn good in-kind rewards with Bitcoin. But if you use some of the restaking Bitcoins like EtherFi's or Lombard, you can get a really good yield on your Bitcoin, especially if you average it up. So you can now take your Bitcoin, you can use it as collateral and do all kinds of crazy things with it. This is fantastic for those of us who are really looking to earn as much as we can on our Bitcoin so we can pass it to you and, of course, keep as much spread for ourselves as we want. Because let's be real here, we like making spreads at the Overlord Club. It's what we do. Full disclosure, by the way, I own multiple different types of tokens that are what they call PT tokens. These are the tokens that are redeemable for the actual thing. I actually don't think we own any yield tokens right now. We tend to sell those off. But that doesn't mean we won't in the future. Things could change at any moment. So assume we have exposure to them, even though currently we do not. Now, that's not all that's going on here at the protocol. And when you actually make a new PT token and YT token, which is the yield token, bam, there's a teeny tiny fee that comes out. Now, that fee goes to the protocol, and a lot of it gets passed to people who have the protocol's token. Protocol token, of course, being Pendle. Now, you can actually lock up this token, very similar to how Curve works, and you can get fees. Now, you'll get fees denominated from the yield rewards that you're getting. So, you can get some nice little income, but you've got to lock it up for multiple years at a time. So, there's that trade-off. But you do get a higher voting reward. So, if you care about that, that's something for you. It can help you get new assets listed, but honestly, there's not a huge secondary market for bribes on that or anything. So, the voting is currently not worth all that much. But maybe it will be in the future. Hard to say. It's still fairly early in Pendle's life cycle. Let's rate Pendle. Let's see where she stacks up in our stack of different protocols. How good she's doing. It's not very integrated. Honestly, there's very few places that accept it. And most of the places that accept it are on the slightly riskier side. Places like Aave and all, they don't really accept any of these tokens. You have to go to more bespoke places. Places that fewer people go, places with less liquidity. I'm not saying these places are bad, they're just a little off the beaten track. So it's really hard to cram a $5 billion order in there like you might be able to do at certain other places, okay? So that's one thing that's less than good. What does their yield rates look like? Are they any good? Yeah, their token yields are okay. They're not great. They're not paying out in massive amounts of stablecoin like I would like, but it's okay. All right. Well, what about their tokenomics? How's that? Is it pretty good? Well, right now, it's okay. It's okay. They have continual inflation going on. They try and incentivize certain things, and you can direct those emissions with your governance votes, and that's something. Hopefully, it'll be worth a lot more in the future, but you know, it's got some value there. What about the core thing of the protocol? Is this whole creating yield tokens and PTs, is it really worthwhile to people? The answer is yes. It's actually a very useful thing. It's a little bit more of a complicated product, but for those of us who actually need this type of service, it's pretty worthwhile. And they get to charge higher fees than a lot of other protocols get to just because it's a much more specialized product. So, while they may cater to a relatively niche market, only a few $1 billion in there right now, it's a useful niche in that niche market. And so, honestly, I think their future will be pretty okay. Now, does this mean I'm telling you go out there and get the Pendle token? No, I cannot tell you to do that. Honestly, I'm not sure how the price action is going to go. It depends on if people get more and more sophisticated and start using this, or if people look for a more simplified answer. Honestly, the way people keep going with things like USDE and some of the savings things we're doing here at the Overlord Club that are just simple, just deposit and we're good, easy interest, it seems a lot of people are looking to let someone more specialized in the field earn for them and do it the simple way. And honestly, I can't blame them. I mean, that's a really good way to do things. they end up making a nice, safe amount of money, and they don't have to worry about expiration dates and rolling over and the fees and the gas fees. And like, it makes sense for a lot of people. So I think it'll remain niche, at least for the next few years. And so honestly, it's a good protocol. It's useful. I use it, but I don't know if it's something that's right for the average guy. Most of them are still trying to figure out the best way to use things like Curve and Balancer. And you know what? This just is a different type of thing. It's okay. It doesn't have to be for everybody. It's useful in what it is. I hope you guys learned something. And if you got more questions, drop them in the comments. There's a lot of stuff we can get into here, but we tried to keep it simple for you. Anyway, you guys are smart. If you got any questions that are just brilliant and need to be answered, drop them in the comments below. We're always happy to help out. I'll catch you guys next time. Tell me, what do you want to hear about next? We got a lot of protocols we haven't went through yet.